failure is something to be absolutely prevented, but actually innovation is very much a fast fail mentality. We need to start adopting that mindset a bit more, I think, in insurance if we're going to close the gaps.
Welcome to the Leader's Edge podcast. I'm Sandy Laycox, Editor-in-Chief of Leader's Edge. In this podcast, recorded on-site at the Council's Insurance Leadership Forum, I sat down with Chris Croft, Chief Executive of the London and International Insurance Brokers Association. Chris was finalizing a report commissioned by LIIBA and just released, Innovation Imperative, Why Brokers Matter More Than Ever. To start things off, I asked Chris what drove his association to commission this report now.
So I guess we have, probably throughout the time I've been doing this job, so nearly 10 years now, always felt that regulators and governments around the world underestimate the role that specialty brokers play and therefore undervalue it, and that ends up with suboptimal outcomes in terms of public policy and supervisory strategy. I think that most regulators around the world look at a distribution chain with more than one intermediary in it and consider that immediately must be bad value because they don't understand the specialist expertise that certainly members of LIIBA and members of the CIAB bring to bringing the right solutions to clients. And I think I use the word solution very specifically because I think one of the things that we want to get away from is talking about products, because the role of the broker is so much more than just being a transactional purchaser of insurance cover on behalf of their client, although I think that's what most regulators see them as. But as we know, they provide huge risk management expertise in risk identification, in risk analysis and modelling, and then finding the right solutions for their clients, some of which will involve the purchasing of insurance, but quite often different services will mitigate risks in better ways. And the context that we're setting it in, which I think is something which will appeal to both regulators and governments, is how the industry can help address protection gaps that we're seeing growing across various lines. Obviously, we're looking at sort of 4 new ways in which risk is changing, increasing digital dependency of companies, and you're seeing significant protection gaps around cyber insurance, increased climate risk, and there's been a significant increase in the amount of losses caused by natural catastrophes over recent years. Geopolitics. Sit in a country which may be contributing in a small way to geopolitical instability. And you're looking at a world where 90% of the value of S&P 500 companies is now in intangible assets. So that's very different from the traditional insurance world of insuring physical stuff.
Yeah, that one actually really is quite interesting. Can you, when I read that, I was like, wow, I didn't realize it had tipped to such a level. Can you talk about that in particular a little bit more?
Yeah, I mean, you're looking at people's value now being much more in things like their intellectual property and their brand and their reputation. And so that it's not indefinable. We need to find ways of defining it. And one of the mantras I've had with the team when we've been working on the report right the way through is that we're not going to use the phrase uninsurable risk, because I don't believe in uninsurable risk. I believe in risks that we haven't found a way to insure yet. And I think intangible assets is that. We're on a path to trying to find ways. And again, it's back to my point around it being solutions. It's not necessarily we're going to find brilliant new insurance products to deal with intangible risk and reputational damage in particular, but you're going to be able to provide services in the event of an incident. You will have people that come in and help manage and control that incident, which is something you're seeing in the cyber world quite significantly. I sort of slightly flippantly say that we'll have really cracked intangible risk when an insurance broker employs Ray Donovan, because that's what you need, is a sort of Hollywood fixer to come in and manage your reputational damage.
We then discussed the innovation gap and what can be done about it.
We talk about the innovation gap in terms of protection gaps. So why are we seeing a difference between the economic loss and the insured loss across various areas of risk? It's because as an industry, we've not delivered the innovation that allows that gap to be covered. Obviously, the central argument of the report is that most of the innovation in the industry happens in the relationship between broker and client. And so governments and regulators interested in closing that protection and innovation gap need to recognise that and ensure that they're delivering the right environment that allows that innovation to thrive. But it's not just about brokers. This is very much calling for collaboration across the industry with the carriers as well. And in part, a lot of that will be around better sharing of data. That data at the moment tends to be fragmented and so of limited value in terms of defining solutions. And we're calling for a much more open approach, as you see in some technology industries where it's a very sort of open platform approach and it allows people to probably to be a much more innovative industry. And that's a parallel we draw in the report, is that actually the insurance industry is structured quite similarly to the technology industry, in that in technology you have the big platform cloud providers and then a lot of systems integrating firms that work off the back of that. That's not dissimilar to big blocks of capital and intermediaries between providing the right solutions to clients. So we're actually structured like a quite innovative industry, and we need to start learning from how that industry is innovative and make sure that we bring those features to our industry, and that is around probably more open sharing of data and an openness to failure, because I think there is a natural risk aversion in the insurance industry and definitely in the regulators of the insurance industry that see failure as something to be absolutely prevented. But actually innovation is very much a fast fail mentality, and we need to start adopting that mindset a bit more, I think, in insurance if we're going to close the gaps.
The sharing of data question has...
I accept that as a representative of the broking community to sit here and advocate more data sharing is slightly risque. It's something that we very much road tested with our community. But I don't think that what we're talking about is a threat to anybody's existing business models.
What is the data that do you think the industry can sort of come together and coalesce around, like, this is not going to hurt any of us, but it's going to help all of us?
So I think it's a more comprehensive sharing of loss data and how you use the data that you've gathered holistically across the industry rather than in specific silos to provide a better view of how risk is evolving. And that's really what we're looking at.
As part of the report data collection, researchers surveyed a global pool of brokers, both retail and specialty, asking about their innovation activities.
So they said that they spend 25% of their time in activities around innovation. So they are analysing new risks, developing new approaches to modelling, things like that. So it is second to the time that they actually dedicate to developing and maintaining their relationships with clients in terms of time taken. And I think that will come as a complete shock to some of our regulatory colleagues around the world who just have no concept that that's what they do.
That is happening. Are there any in particular areas where you found they were investing more than others, or was it?
And a lot of it's around data analysis and data development. And indeed, one of the case studies that we've cited in the report is actually around the challenge for the suppliers of wind turbines when it's not very windy. Because you lose money. And that is an insurable loss. Yeah. And one of our members, the case study talks through it, has basically developed the first catastrophe risk model for wind farms, which is by use of an enormous amount of data. So it's an incredibly interesting application of data. You also see in the Ukraine grain corridor, which was developed using a lot of geospatial data to identify safe shipping routes and be able to base the cover around that. So there is a mass of fascinating data available now. We've been working with a company in London who, and I find this fascinating, and I think everybody should find this fascinating, or I can understand why you might not, is they can sit and in their offices and watch slag heaps in Wales moving from the satellites.
That's crazy.
And they've managed to sell some of this to local governments in Wales because the movement of slag heaps is obviously important to them because they might collapse, and there's been historically some awful tragedies caused by that. But so just that idea. They also did a case study. There was a dam that collapsed in Brazil 4 or 5 years ago now, I think, and caused a significant number of deaths and just devastation. They've gone back through the data that they had from the satellites they worked with, and they have identified that 6 weeks before it happened, they would have been able to start detecting ground movements that would have allowed it to be mitigated. So the sort of sheer scale and specificity of data that's available now is enormous, and so that is at the core of how you can build really innovative insurance solutions.
We then discussed the major hurdles to changing perceptions of brokers among regulators first and foremost.
We're hoping this will be the start of a big conversation across the insurance industry and obviously specifically with governments and regulators. So my intention is to go and see a number of, starting probably with the supranational regulators like the International Association of Insurance Supervisors and the OECD and people like that, and have a conversation and just say, this is, we think that you haven't fully understood how our industry works and thus haven't supported it to the ways that you could. And I think that's important specific conversations, but we hope that this will start a debate that we believe that brokers are absolutely intrinsic to the solutions to some of the problems that report sites, but we can't do it on our own, so we do need a collaboration across industry. So we hope that it will spark conversation and will be a process, and we don't see it as a once and done thing. We want it to be a living document, so we've got some plans to how we might add to it over the next year or so, probably adding more case studies and maybe adding some more sort of angles in terms of the analysis, so it keeps it current, keeps it fresh, and keeps that conversation going.
For the US brokers, when you look at like the specialty markets, the non-admitted markets in the US, and there's not a lot of regulation do you feel like they should pay attention and like this is something to be sort of looking at and thinking about and potentially could be coming your way that you need to?
Well, I think interestingly, we, as much as you can have a poster child of regulatory regimes, because it feels slightly anathema, but the way the E&S market in the US works is probably as good as it gets in global regulation. You feel there's more innovation in the E&S market in the US than there is in most other markets, and that's because it is a lighter touch for complex risk, and that's a conversation we are having with the Financial Conduct Authority in the UK, and they've made some quite significant moves towards being better at differentiating between personal lines business, where you have consumers that need protecting, and complex commercial business, where sophisticated customers don't need that level of regulatory protection, and they can give a lighter touch is a sort of phrase that's got a bad rap around regulation now, but certainly a more proportionate approach that allows for more innovative thinking. And again, back to that idea of failure, is that sophisticated customers can deal with failure, and we talk a lot about MGAs in the report as well, and the MGA model is probably where you'll see a lot of the focus on innovative activity, and MGAs don't pose a systemic risk to the economy or the industry, so they whisper it quietly to regulators.
Then some final thoughts from Chris upon the report's release.
I mean, I think the one point we're doing, obviously, I run a London-based organisation and our members are focused on the London market, but I don't know of any LIIBA member that just places business into London. They all access capacity around the world because that's in the best interest of their clients to do that. And we have the word international in our association title for a reason. And whilst I, loyal London market person, I do think that London will lead this process. It's not a London game. This is about how risk emerges from domestic markets and finds a home in international markets, and facilitating that process and understanding that that's a good thing. And back to a sort of central point that we've always argued all the way is that the specialty markets aren't in competition with domestic markets, and government and regulators need to get their heads around that. It's risk that the domestic markets don't want, so things like retention rates and unhelpful licensing arrangements don't deliver anything. They don't deliver a better regulatory protection for your domestic corporations. They just add grist and cost to them, and they end up with less optimal solutions than they might do.
That was Chris Croft, Chief Executive at the London and International Insurance Brokers Association, discussing the release of Innovation Imperative: Why Brokers Matter More Than Ever. For more Leaders Edge podcasts, visit leadersedge.com.